my YouTube channel, and at this time we are going to study and watch basics of accounting, maybe introduction, the foundations of accounting. Here I put accounting for all and presented by thiekfinwealth channel. So let's advance here. We are going to study the basic functions of accounting process and financial statement and what actually is assets and liabilities and what is credit, what is debit. So I would like to request you all to watch this video till the end to understand various concepts, process of accounting and financial statements, and what actually is assets, liabilities, credit, debit. So, accounting. What is accounting? To understand accounting, we are going to take a few examples. Let's take example of company. See, in a company, there are lots of transactions happens in a daily basis. Lots of financial transactions, lots of financial transactions are happening on a daily basis, and lots of financial data are being generated. Like, what is financial data? Maybe lots of bills, receipts, lots of vouchers. This is happening in a daily basis in a company. So accounting is recording the financial data, recording the financial data. After that, we classify the data into a structure format. After classifying the data into structure format, we summarize the data, the financial data into meaningful format. Okay, meaningful format. So why we say meaningful format? As it has to make sense for the users of financial informations. Maybe users of financial information, let me write in short form, financial information users of financial information like shareholders, so users of financial informations like government, maybe the government, shareholders, and creditors. Creditors are the one who lend to the business or who lend to the peoples. Who are the users of financial informations? Sorry, users of financial information. The government, let's put in short form, shareholders, creditors, the one who lend money to the business or to the peoples, etc. Okay. We need meaningful information. Why meaningful information? So I'm going to examine this balance sheet to make to give balance sheet. We prepare balance sheet to give financial position of the company. Financial position of the company. We have to. We need to summarize that data, financial data, into a meaningful format, so as the users of financial informations may make a meaningful decision. Okay, so that they can make a meaningful decision, right? And profit and loss account, it gives us a financial it gives us financial performance of the company, like how well the company is doing. So in a short form, accounting is summarizing the financial data into a meaningful format. Okay. As I already stated, that if you watch till the end, you will get more clear about what actually is assets and liabilities, credit, debit, balance sheet, profit and loss account, financial statement process, who are the users, ledger posting, etc. So let's advance. Now, what is the process of accounting? Process of accounting. First one is source document. Source document and journal, maybe we also call journal entry, journal, ledger, maybe called posting, and trial balance. Trial balance. In the process of accounting, we have source document. Source document is to record any transactions we need. To record any transactions. To record any transactions mean financial data like maybe voucher, invoice, bill, etc. Here comes journal after that. Based on the source document, based on the above, based on the source document or based on the above, we have to make an entry, that is journal entry. Based on the source document, here we have to make a journal entry, okay? A journal entry. If anything is unclear or if anything is doubtful, so you can put on comment, you can give feedback. Always welcome that, okay? After the ledger or posting, posting, ledger or posting. Here we collect credit and debit balance, right? Sorry. After this, we come to the trial balance. In the trial balance from ledger balances, we summarize into one statement. From the ledger balances, we summarize into one financial statement. Okay, financial statement. So from this source document up to this trial balance is called bookkeeping. Is called bookkeeping, which a normal accountant do this job. Okay. Here we come to the financial statement. Financial statement. Financial statement. Let me put in short form. Here we have profit and loss statement, balance sheet. Balance sheets give us financial position of the company, and profit and loss statement gives us financial performance of the company, like how well the business is doing. The full form is cash flow. What's coming into the business and what goes out to the business. Statement of changes in equity. Statement of changes in equity. This is financial statement, profit balance sheet, which I'm going to explain later, and profit and loss account. Here, profit and loss account, expenses and revenue or income will be shown. Expenses and revenue will be shown in profit and loss statement, and here in balance sheet, assets, liabilities, and capital will be shown here in balance sheet, right? I think we can move. In balance sheet, this is balance sheet, okay? Balance sheet. In this balance sheet side, there are assets and liabilities and capitals involved here. Here, capital cash. Let's take some example here. You are going to start a business. Let's say sole proprietorship business. Okay, sole proprietorship business, and you are a single owner. You invested 1 lakh capital. You invested 1 lakh capital, and in this side we have capital. This is the cash you invested in your business. Why you write your capital? To make a meaningful information, let's take a few examples. You invested capital. You invested capital. This is the cash you invest. You bring here in the business. So you invested at the same time capital. So we have to write this side also 1 lakh. Let's say you purchase machinery. You purchase machinery for 20k. You spend 20,000 rupees for purchasing machinery. Machinery is an asset. Why? You have control over this, and you can generate future income through this machinery. So you spend out of this cash, you have to minus here 20,000. Then you want to proceed more projects, or you want to do something that you want to do something in your business, or you want to enhance your business, you want to do more projects. So you approach bank here for loan. You are taking for loan. You approach loan and you got how much? You say, let's say 40k. Okay, 40k from the bank. You got 40k. Here there is two things happening. Two things happens here. In one side you got cash 40,000 cash you got. At the same time here there is an obligation. There is an obligation. This 40,000 is you have to pay back to the bank. That's called liability. we have to write bank loan. This is liability, okay? 40K. Here the balance would be same, okay? 40,000. This side also 14,000. The time you approach the bank, there is two things happen. At the one side, you got cash, which is an asset, 40,000. In the other side, there is loan, and which is, we can say that an obligation or present obligation that you have to pay, you have to pay in the future. So this is coming bank loan. Here the outsider involved. The outsider involved, which you call liability holder. Liability holder. Holder. So as the owner of capital, you have to claim from the total assets of the business whatever is left in the business. So this 10,000 is you have to claim. You can claim this. After deducting this 40,000, after deducting all liabilities, this is liability. After deducting 40,000, what comes? This 10,000. This 10,000. This 10,000 is, you can claim that. Then after deducting all liabilities, after deducting 40,000. So from here, for if we deduct 40,000, then it comes to 1 lakh. 1 lakh is yours, and this 40,000 is outside shareholder, which is called liability holder shareholder. Okay. So I want you to be clear about assets, liabilities, expenses, revenue, elements of financial statement. Elements of financial statement. In accounting, we have 5 elements of accounting. We have only 5 elements of accounting. We have asset, liability, expense, Sorry. I'm so sorry. Let me erase again. Now we are going to discuss the last one. Elements of financial statement. So what are the elements of financial statement? We have 5 elements of financial statement. The first one is asset. The second one is liability. Third one is expense. Fourth one is revenue. And equity, which also called capital. Equity and capital is same thing. I'll explain later this equity and capital later on. So first of all, let's try to understand this asset. Asset is something that company owns and control, from which future economic benefits are expected. It helps generation of revenue. Suppose if you purchase an asset today, use for years, and it provides value in the future. For example, land, building, machinery, which you own. You own and you have control. You have control to derive future economic benefit. It derives future economic benefit. That means it provides, it brings in cash into the business. You have built, you purchase machinery, you pay cash 20K, which you own and control. And this machinery will produce many benefits into your business. So you derive future economic benefit. You bought this building, then you lend out to the tenants, which in return they pay you for the rent. every month. They pay you in return. They pay you for the in return they pay you 15K. So you derive from this asset this future economic benefit, which is cash flow. So expense. This is expense and expenditure incurred for the cost of operations. At the same time, no future benefit is expected. Expense. For example, rent, electricity. Here, you paid for the rent of your house. You paid 20K, which you already utilized the benefit. No further benefit is expected here. You just cannot pay back my money. You just cannot ask the landlord that you cannot say that pay back my money because you already utilize the benefit. In case of electricity also, you pay the electricity bill at the end of the month, rupees 1K. You just cannot say that give me back my money. You cannot say that because you already consume this benefit of electricity. You already consume, you already have, you already use, they utilize. So no further benefit is expected because you already utilize, you already use the benefit. Revenue or profit. In simply term, this is inflow of cash. What's coming into the business in the form of cash. Or anything receivables. Anything receivables. Or someone has to pay you. Somebody has to pay you. Somebody owes you. Somebody, someone has to pay you. That's all about revenue or profit. Here, expense and revenue will be shown on the profit and loss statement. And these assets, liabilities, equity, capital will be shown on balance sheet. Right? So now let me explain about that equity and capital. Where you call equity at the same time where you call capital. Capital is simply implies that what you brings into the business, what you invested in the business, that is capital. Let me try to explain. I'm gonna explain here equity, equity or capital. They are the same thing, but we can use in different way. For instance, you are running a sole proprietorship business, proprietorship business. So you are single owner, that is your capital. Okay, you are single owner in sole proprietorship business. You are single owner. What you brings in and what you invest that the cash, that is your capital. Since there is only one owner, that's your capital. In partnership business, in partnership business, there are few owners. There are few owners which we call shareholders. So we can say X capital, Y's capital, Z's capital, we may say that. So in a company, in a large company, there are lots of owners. There are lots of shareholders. There are lots of shareholders. More than 50, more than 100. So in sole proprietorship business, you are single owner. That's why we call your capital. And in partnership business, there may be partnership business. There are few owners. X capital, Y's capital, Z's capital. We can call that. But in a company, lots of owners, lots of shareholders. So that's here equity comes. So these shareholders have equity capital, which is divided into two. Here equity capital or preference shareholder. So let me repeat again. Suppose you are running sole proprietorship business. In a sole proprietorship business, there is only one owner. So a single owner. So the money you brings in and invested in the business is capital. So your capital in a partnership business, few persons involved. So we may call X capital, Y's capital, C's capital. But in large company or medium company, there are lots of owners, there are lots of shareholders. So here equity is coming, like equity shareholder or preference shareholder. So the difference between that equity and capital, that's all. So this time we learn about the introduction of accounting and process of accounting, financial statement and source document, journal, ledger, trial balance, elements of financial statement, asset and liability, equity, capital, expense, revenue, cash flow, cash in. I hope that we are very clear about this. I explained in a very simple way. I think we all are clear about this, and I hope that if any doubts of there is there, please feel free to speak up to me or comment in comments box or any feedbacks. Always welcome that. Okay, that's all for this time. Thank you for watching and thank you for following me and thank you for your patience. Love you all. Thank you so much.